People have been predicting doom and gloom for the United States economy for so long now that it's hard not to be desensitized to it. To be sure, America has been trucking along as though inflation isn't out of control, interest rates aren't totally oppressive, and there isn't war breaking out on multiple fronts around the world. All of this, while peers like Canada and the Eurozone have shown plenty of signs of economic stress. But is it possible that real cracks are finally starting to show in the mighty American machine? It's starting to look that way. Let's talk about what's happening at McDonald's restaurants around the country right now. One thing I like to keep an eye on as a bellwether for the wider economy is stock market earnings, especially those of companies that cater to consumers. And this week, fast food giant McDonald's reported troubling earnings indeed. Economists have long pointed to the strength of the American consumer as the main reason the country might escape recession and bring the economy in for that soft landing the Federal Reserve Chair Jerome Powell is always talking about. But is there something burgers and fries can tell us that the big brain economists can't? Last week, McDonald's reported its latest quarterly earnings, and they were less than impressive. In fact, the burger chain missed its quarterly profit estimate for the first time in 2 years. And as such, the company's stock has dropped around 8% over the past year. And penny-pinching consumers are to blame. Well, actually, that's probably not fair. McDonald's not offering food at prices people are willing to pay is to blame. And part of the weakness isn't McDonald's fault. There are various global conflicts going on that have evidently hit its international sales. But still, the company acknowledged that, quote, all income cohorts are seeking value when discussing why comparable sales growth has been sliding for 4 straight quarters. Here's what CEO Chris Kempczynski said on the company's earnings call last week, according to CNBC. Quote, it is clear that broad-based consumer pressures persist around the world. Consumers continue to be even more discriminating with every dollar that they spend as they face elevated prices in their day-to-day spending. Now, as inflation has massively pushed up the cost of even the cheapest goods, low-income households are finally starting to adjust accordingly. And the CEO continued to say, I think it's important to recognize that all income cohorts are seeking value. And it's not just McDonald's or restaurants for that matter. Now, everyone is getting squeezed right now. And although more Americans are eating at home due to high restaurant prices, they're also cutting back on goods normally found in their pantries. And in this Reuters article, the CFO of Mondelez, Luca Zaramella, is quoted as saying, quote, ongoing softness in the U.S. biscuits is driven primarily by brands that had higher penetration among lower-income households, such as Chips Ahoy. And it's truly a sad state of affairs when even a bag of Chips Ahoy cookies is seen as a luxury. So, what's next? Although some restaurant brands have had more robust performance this quarter, they've had the lead in what's shaping up to be a bit of a price war with their competitors right now. And as those prices fall, so do their margins. Said Kraft Heinz CEO Carlos Abrams Rivera, quote, there's a clear pullback of restaurant spend by these lower-earning households, especially in restaurants and convenience stores. So how long will this weakness last, and what does it mean? Well, much of the world economy is propped up on the shoulders of the American consumer, but that weight is getting a lot harder to carry. Now, I know we're all tired of hearing about recession calls, but the way prices are right now, and with consumers pulling back even on the cheapest items, something's got to give, doesn't it? Folks, thank you so much for watching, listening today. Really appreciate it. If you enjoyed this piece, please do like, subscribe, all that good stuff, and let me know in the comments. Are you cutting back in response to rampant inflation? And where and how are you doing it? So yeah, please do let me know in the comments, and we'll talk to you again soon.